Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Just had an awesome Monday session in the Daily Brief where our Chief Technology Officer, Sjord, he comes on and he does a nice presentation. Let's just make sure YouTube's working. Monday session. It is good. On Mondays, Sjord comes on, tells us a little bit about site development, and also too, I do believe that the three principles here at TRI, I'm an old man, so I've already got the miles under my tires. But our two younger professionals who are part of the TRI Triumvirate, Sjord as our Chief Technology Officer, and Julian as our Chief Operating Officer. I think both of them have really matured over the past few years and have very unique market perspectives. I like the idea of they have their trading plans vetted. They have tools they like to use. They have multiple reasons to consider taking trades. They have unrelated reasons. And it's great to see Sjord. He personally has fallen in love with things like Bollinger Band studies on relative strength indexes, which is really cool. Totally unique perspective. So we had a great presentation on that. And the long and short of it here, you've probably heard across YouTube and all the various crypto talking heads that, the one thing that we really need if we want to see a new bottom and bull market emerge is we got to see the volatility come out of this market. And what's really cool is, we do a lot of our Bollinger Band studies on things like price and things like volume, very different perspective there. Sjord happens to like to use Bollinger Band studies off of relative strength index. So really, really cool application of the tools and the same principles right across the board. Volatility, the bands are extremely wide right now, so we're probably not that close to any sort of bottom just yet. Okay, so that's sort of what we do on Mondays. And of course, if you want a big old conversation about the corn, I spent, it was actually funny. Yesterday, YouTube threw me for a real curveball. But we had three different videos in our broiler chicken show yesterday. The first one was a conversation. It just so happened that YouTube cut off the video at the end of the conversation, so it worked out nicely. The first part of this broiler chicken show, the video is like 35 minutes long, and then there's a second part which is about an hour and 20 minutes or so. So if you do want to watch and you're wondering what happened, YouTube just pulled a fast one on us. And we spent probably a good half hour or so talking about long-term demographic cycles. So that was a really cool lecture. We then talked a bit about how different traders should use different setups, how new traders should be spending the time getting to know range trade setups, getting to know trend continuation setups, and of course practicing, which means, like 100 paper trades. Make Grim happy or the Wookiee will come and knock down your door and visit you and have a nice conversation with you. And Wookiees are big too, so be careful. Anyway, point of the matter here is we had a great conversation in the broiler chicken show yesterday. What is our expectation for level 3 or level 1ers coming out of the basic introductory program, and what kind of setups should you be hunting, and really getting to know the setups. And then we spent the latter part of the video yesterday taking a good look at the corn and sort of, what does the higher time frame perspective look like stuck in a trading range. And interestingly enough, as sort of a nice dovetail to that, what I noticed here this morning, we had sort of finished off that video yesterday with I'm a bull, I'm a bear, stuck in a range, and gee whiz, here we are just parked in that range. So we'll talk a little bit more about Bitcoin in a moment. I just wanted to talk a little bit about sort of what we did in the daily brief today there. So, of course, for your free video here, I like to do this little chart deck. It's a pretty simple overview, and we'll just take 10 minutes and go through this. So. Our first conversation right out of the gate this morning was, and it's always a good idea to start with sort of the hegemony proxy. And this may change 30, 40 years from now. We may be using something completely different. But for today, we're still using the US dollar index as sort of the basis of this fiat crazy world we live in. And we're stuck very much in the trading range, probing against the bottom end of the ranges. We had some econs that came out later last week. They'd sort of put a floor in the US dollar, saying that the economy was still pretty strong, jobs reports were strong, that kind of thing. So, interesting, off of the weekly basis, we're parked in this massive trading range defined by the gaps on the daily charts. And now you can see that off of lower time frames, I think we're probably, this wick right up here, and now these highs represent the top end of our range. And now on those econ reports and testing these previous lows, I think we can identify this as the bottom end of a range. So you can quite literally see the range is compressing. My hunch is probably sometime into early mid-January or something, this thing releases itself, and then we get actually a new trend direction. But for the time being, the consolidation continues. If we talk risk on, risk off, there was a pretty big development overnight in the how do we say this? The market, I've found, often takes a pause if we ever have any sort of statesman or elderly person in our the 1% kind of crowd. If they happen to pass away, everything sort of stops. And so I think we had that happen overnight, in that basically the gentleman who, I don't even know where the hell I have it on here, right here, the gentleman who sort of was the official warrior of inflation, late 70s, early 80s, was the Fed chairman, was credited with sort of getting control of inflation in the United States. He passed away, Paul Volcker. And my hunch is the stock market and all sort of the capitalist kind of, that 1% kind of crowd, I think they're all going to basically just be sitting on the sidelines. There'll probably be things like state funerals and stuff like that. So just be cognizant that that's sort of the backdrop of the current market state. This is a pretty big... he was very old, but he was still very active, but it's still a bit of a bombshell, and the market's going to take some time to digest that. So, be cognizant of that, and I kind of saw that in the market today. We look at our risk on, risk off. You can see everybody is just sort of parked here. Now, why? And I think the answer is, of course, everybody's in a state of shock right now, and anybody who is sort of financial related, this is a pretty big event, Mr. Volcker finally passing away. So I think we have to sort of look at the market from that context today. I do see stocks are starting to look a little bit heavy up here against the top end of the range. I still believe that the market wants to rally into that Christmas event window, which would be a perfect 1 year horizon. It is interesting too, though, that Brian and his crazy cycle talk, you can see that we are actually coming to the end of this bull cycle run here. So ironically enough, now, as of sort of the middle to the end of the last week of December, that's actually the cycle pivot. I'm thinking that the stock market wants to move another week or two higher. This isn't exact science. The bottom of this particular cycle happened to come in right at the beginning of October, but I was thinking it had to come in near the end. But that's here nor there. The point here is that I actually think now, until, wherever this top comes in, until, ironically enough, about the middle of January, now we're actually in a headwind part of this cycle. So we had the market extremely friendly, ratcheting higher, and now I'd actually make the argument that the wind is now going to start being in our faces again. So be ready for that. And then also, too, if we just look at these channels and stuff, you can see where key support is. What does a correction actually look like? My hunch is we're probably going to come back down and revisit this gap at 295 that we've been talking lots about. But that's not today. And if anything, what I think today is, because I'll be doing more of these videos in the days ahead, today is all about everything's on pause, state funerals. There's no major econs in the States out today, that kind of thing. Oil continues to work its way higher, and I think it will, into that big Saudi Arabian Aramco oil IPO that they really need to get off. So I do think that a big part of the energy market's being influenced by that. But, individual stories, and we'll get to it more in a bit, some of these energy stocks are just stunning here. And one stock that I've been squawking about, and I had it on the screen. This is Friday's write-up. And it just launched itself higher here. So go figure. AR taking off like a rocket here. So I still think energy's going to catch a bid. My GPOR held the lows. I didn't get stopped out on that. The REI put in a new double bottom today. So those names are looking good. And I squawked to you guys a while ago about things like Halliburton. They're still pointing up. And I don't know, Kevin, or you, I don't know whether you got a microphone. You still in your oil? Have you gotten flushed out of there?
Oh yeah, I'm still in it. I missed my target just by a bit on Friday, and now it's just sitting there.
My hunch is you're probably going to get a fill here pretty soon. So way to go,
Yeah,
sir.
I think so.
Way to go. And then risk off. With the oil still looking uppy, the gold's coming back down against the bottom end of its range again. I don't know whether we've exhausted this move. You can see we got up pretty darn close to that high. I don't know. Maybe we've exhausted, but tons of gaps all over the place. So not a big surprise to see some backfilling. Biggest gold stock in the world's actually down on the day, kind of like with the XAUs. So we're right back down against this original bottom. And then Mr. Newmont, who wants to be the biggest gold stock again, a down day, because I think just the selling across the board in oil or gold is a little bit just too strong today. But you can see he's backing off, and if anything, in a structural signal around that 25 level, and I'll probably take a long shot on that into the sort of spring, looking for that $47 target way up top. So, long and short of it here, risk on, still hanging in there, risk off, not really doing a hell of a lot. Gold did come off a bit last week, and I think we also showed you this, the gold market now coming down into a really, really interesting area. So if we can get a nice little W on the gold price right down in here, oh boy, that would be nice. It's not here yet. It's probably going to take some time to develop, but I do like what I'm seeing. And of course, I think I've told you I picked up. I've got a basket of gold stocks, but I did go and actually buy a gold stock here recently. In that I bought this Alio for my retirement account, and you can see the same logic there. We got to move now up through this 87 area here, and I'm tickled pink. I'll have a nice solid bottom here. Right now, it's still probationary, if you will, for a trade. We got a nice spike through that 87, and I know we're off to the races. So. Individual stocks, the only reason why I mention this AR is because it just goes to show how violent these moves can be. This is the whole beauty of TRISOF. Is as you were sitting down here, there's no way you could have anticipated this kind of move. And this is why I love this little derivatives model, is that it sort of told us, hey, pay attention down in here. These options are getting too cheap. And sure enough, kaboom! And I think Kevin was telling me we were looking at the calls, the leaps. They were even like a year-long options at like 50 cents last week, and now they're sitting like 85.90. Boo, hiss, hiss, boo. But anyway, it is what it is. If we do get a pullback to fill in these gaps here, I might take a look at this, but I have my hunches we've missed the trade. It's gone. Now, where am I going with all this? Just as this is sort of banging down here, you can see these cryptocurrency. This is a mining company. They are right on their lows. I like this hut because you can see there's a juicy gap down here, and this hut, that gap's at about 80-90 cents. And you can see how we're slowly working our way down into these levels. So I'm really interested in these cryptocurrency related venture cap stocks. This happens to be a miner. I'd also keep your close eye if you are a fan of him. Some people like him, some don't. But good old Novogratz' stock, look what it's doing. Gee whiz, does that look a bit familiar? You hear Brian squawking about reload zones at or below reload zones. Gap fills, coming back down to POX. And you can see if this guy actually turns, you can see resistance is basically a double from here. And that's interesting too, because if you look at the HUT, same thing. You can see we're at the bottom end of the range. If you get a fill here at 90 cents on some sort of stink-ass bid here, just a return back to value is $1.60, right? To fill in that notch, that's $1.80. That's a double to fill in that gap. You can literally, buy some down here, of course, if this is a bull. If it holds, right, and sell it on that $1.80 rally, sell half of it kind of thing. You got yourself free ride on these guys for the rest of your life. FYI, I'm working stink bids. I am more than happy to be a buyer at this thing at 90 cents. Well, we'll see what happens. So I wanted to just point out that these cryptocurrency mining stocks are looking really interesting in here. And we did look at a couple other venture cap names as well, but I'll leave that for another day. As for the corn itself, there isn't a heck of a lot new to report about this conversation. Just watch the broiler chicken show from the yesterday to talk about sort of this, what I like to call bull-bear battle lines. And I think probably the market will tell us I am a bull if we can perk up through this 78.70 area, and I'm a bear, if we tick down through about 70.80 area. And right now, it's a hurry up and do nothing. What was really cool is this really reminds me a lot of my crude oil pit trading days. And that this is an exchange opening event. It's Monday morning. We got a big run up beginning of the week, and of course that's on what we call single ticks, very specific reference to the volume profile, and it was also at a 78.6 fib level. So interestingly enough, not only did this set up a very typical pit trade, what we call the SFU setup. I won't tell you what it stands for. It's a Sebastian Bleep U setup. You can fill in the blanks. Anyway, very typical pit traders kind of trade, basically selling new highs and then looking to take partial profits on a return to the mean. You could use the POC, you could use moving averages, whatever, and move your stop to scratch on remaining. And so at this point, basically they've got half of the short position on. They're sitting pretty. They've already booked half profit, so they've made their money for the day to keep the prop firm happy. And they're just going to ride the rest. Who knows where it goes? Maybe the market works its way right back up and they get stopped out at scratch on the remaining. Could be. Or this thing just completely craps out and they end up actually having to buy the position back right into the closing bell, right at the day low. So I've seen both scenarios at least 100 times each. And of course, we talked a little bit about how Hogan, Nebraska would trade that. Very, very typical pit trader. And it's interesting because Bitcoin, over the weekend, they just announced that Bakkt has now got options listed on their futures product. So what I'm seeing is Bitcoin is morphing into a very normal, very typical pit trader kind of product. There's nothing out of the ordinary here. Business as usual, rinse and repeat. And of course, crypto kids, they not only got FU'd if they shorted this and had their stop up here, boom, FU, get out, but they also got FU'd on the bottom side. You could argue that this low here is also an SFU setup. And so the pit trader, CME, Bakkt, Cool Kelly, corrupt Kelly, corrupt politicians. I mean, it's just sick how this system works. Anyway, long and short of it here is this has got This has got New York Stock Exchange 1%, bankers rule the world written all over it. So if you want to play in this lower time frame world, you got to understand what the rules are. It's not an easy life, I'll tell you that much. And it's, to be honest with you, for the crypto community, you're probably best just to leave this kind of market alone. And just trade the higher time frames, weekly W's, all that kind of fun stuff. And, speaking of which, there was a colorful character in this crypto space back up here, wherever the hell it was. I'm not sure why there's that damn candle. Screw everything up when they do that. Let's see. Maybe I'll do it over here. Actually, you know what? Why don't we show you versus Bitcoin? It's probably easier. There's this crazy character, and he's a bit of a character, no doubt about it. He has, I think he's famously known. Actually, isn't that weird how these price charts are like this? That's not enough data for us to work with. Come on, TradingView. With some half-decent data, please. There we go. There. So, we had lots of fun that last cycle, trading via coin, VIA, all the way up top, selling halves on doubles, blah, 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 blah. And the developer of the coin actually, back at the beginning of when I first started this website back in here, he was actually a student of TRI, but nonetheless, that's here nor there. He was famous through this period for going to Vegas and eating a certain body part of female anatomy on Twitter memes and all that. So anyway, I put out a fun, cheeky sort of tweet this morning that, oh no, am I going to have to start eating you-know-what? Because, I mean, there's the W's. There's spades a spade's a spade. I'm not here to actually have I am asset agnostic. It doesn't matter whether it's crypto or whether it's an oil stock or whether it's a gold stock or whether it's a commodity. You know me. My favorite letter of the alphabet is W, right? So anyway, you can see the W. This happens to be versus dollar. Like I said, if you actually look at this versus Bitcoin, I think it actually looks even better. Don't chase. You're not allowed to chase. You can work some stink bids. There's a cheeky little gap. You could work a stink bid. But hopefully everybody can see one very distinct letter of the alphabet that's popping up here. So it's just yet another example of what I think is a coin picker's market, and there are opportunities out there. And the funny thing is, it's the sickest part about this is we will get back up into this kind of environment. This gentleman will become internet memes and super popular with all the cool kids and all that kind of stuff. The question is, you as a capitalist, do you want to? Is it worth taking a risk at levels like this to take advantage of this? Because it'll come back. At some point, we'll be back into that nutso-ness again. And do you want to be like spoon-feeding the market coins as these things move higher? I mean, it's there. It's just staring at us right in the face. Hopefully you can see that W. So I wanted to leave that with just yet another reiteration of the simple fact that I think there is a lot of opportunity in this space right now, guys. Okay, I have no idea how long that was, but I feel like I probably talked for a half an hour. So I hope you all enjoyed that and got some good value out of all that rant. All the best, and have yourselves a great day. Oh, I guess I better do the right thing. Bye for now.